Private payroll data from ADP just out. Steve Leisman has those numbers. Steve.
Good morning, Becky. 62,000 from ADP, a bit above estimates. Total payrolls coming in the private sector versus 39,000 was the estimate. February ADP was revised up by 3,000 to 66,000, so right in that line there. And good balance between goods and services, 30 on the goods side, 32 on the services side. And there's your non-farm payroll estimate for Friday, which we will be at. I'm very excited. Joe and Becky are going to be there on Friday. A good Friday. It's going to be a great Friday, I think. 59,000 is the estimate for government. What's that?
Because we only have to work 1 hour.
Exactly. I wasn't going to say that part. But anyway, look at what happened here, though, folks. A small business, which has been under a little bit of pressure, surging ahead this month, up 85,000. Not so good on the medium and large businesses side, both of which were negative. Looking at by industry, there's the education health services, still the leader in terms of creating jobs in this country. Construction up 30,000. That's interesting because the construction spending was not so good. Health, leisure, hospitality up 7,000. Manufacturing has been under pressure for the better part of the year, down 119,000 up until this number. So maybe down more over the year for the whole year. And then trade and transportation down as well. There's the great wage data that ADP gives us, 4.5% for job stayers, still doing better on job changers. That's actually better for the job changers, up 0.3%. So that's, we're trying to figure out what the heck's going on with this job market. And a lot of Fed officials, Becky, I'm talking to, are a little bit more sanguine about it. They just don't see the weakness out there that was all the concern and all the rage earlier this year. And now they're like, we're settling down. And I forget who had said it. Maybe it was the chair who said, zero could be the right number.
Yeah.
Because of the population growth.
Neela Richardson's here. She can answer some of these
all
questions.
These questions.
Well, she is the chief economist at ADP. And Neela, what do you think of what Steve just said from what he's hearing from Fed officials, that they're not as worried about a jobs downturn? Are you?
No, not at present. We've seen 2 consecutive months of pretty steady job growth, but most of it has been in healthcare. And that's really the story. Healthcare is transforming the labor market. For the past 2 years, 3 out of every 4 jobs created in this country, this is state-level tax data I'm referencing, came from the education and healthcare sector. So is that the economy that pushes growth forward is the question, because a lot of these jobs, Becky, are low-paying home healthcare aides jobs. They are not the full-time, full benefits 401k jobs that help support consumer spending.
That's interesting. And you break it down to healthcare more than education. I don't know why they put education and healthcare together.
These are large super sectors to make it easier to track. Education is about 12%. Now, it's worth noting that education has been holding its own with the healthcare sector. So it's not a diminishing sector within that large super sector. But those two combined are eating everything else. They've gone from about 13% of employment, that big sector, to almost 20%. In the next 10 years, healthcare alone will be the largest sector in the United States.
Wow. But you point out that those aren't always great jobs.
Well, we've also seen the part-time share rising. Commiserate with that increase in healthcare, and that's because we're not seeing employment just in doctors' offices or in hospitals. It's really in-home care driven by demographics.
How much of that is the demographics of the nation? As we age, you're going to need more and more people in those jobs.
And people want to age in place. This is a shift in demand as well, and so that shift in demand is driving a lot of the hiring that we're seeing right now.
To Steve's point, when he brought up the big businesses are adding jobs, I think it was 85,000, but
it was a small business.
Small business.
Oh, yeah. Small business was adding.
Yeah, which has been a little bit of a lackluster area for a while, and I think there had been some tariff effect in there, and maybe now they're finding their feet. We don't know. We'd like to see this to continue.
Or how much of that is they're not employing AI as much, so they can't lay people off and have the computers do their jobs, too.
I think there's a couple of reasons. I mean, those are great hypotheses. I'll add a couple of more because we don't really know. We've seen a lot of small firm strength, and these are very small firms. It could also be that small firms are playing catch-up. They can't offer the same compensation that large firms do, and so they have to, when large firms are not hiring, that's a fertile ground for them. The second thing is a shift in what workers are wanting right now. Some workers are looking for part-time employment. We've seen the part-time share rise significantly over the next 5 years. That second or third job that people need to keep up with price levels, that might be coming from the small firm sector.
Neela, how do you expect what's happening with the oil prices if they continue to affect the job market?
You know, it's sight unseen right now.
Right.
We don't know the impact. It's going to look like, is it going to affect the goods sector, I think, first? And does that increase inflation overall in the goods sector? And if firms are squeezed in terms of transporting goods and services, does that fall into employment? We have not seen any of that yet, but it's too soon.
Yeah, I mean, my concern is that I think if you're in the AI business, you're like full steam ahead. I think other people who are more concerned about the outlook would just sort of stop in place. I don't think you fire people in response to this, but maybe if you had expansion plans or other ideas,
unless you're Oracle
you could be
and you lay off
frozen.
30,000 people because you're spending so much money on the infrastructure build.
Yeah, there's a lot of cross currents. If you're investing strongly in AI, does that come at a cost in terms of hiring? If you are worried about moving your goods around the country, especially if you're a small firm and a price taker, does that spill over to your hiring plans? Hiring is not just about hiring anymore. It's about everything else going on in the world. And that is a significant context shift for small firms that are used to looking at their consumer demand, their local markets, not the global markets in terms of energy costs and making their hiring decisions.